Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Apple. They just had their Q3 2021 earnings yesterday, and the stock is trending down slightly as of now. So in this video, we're going to talk about their earnings, and I'm going to give you my opinion on why I think the stock is kind of pulling out back a little bit on the heels of such amazing earnings. So the first thing we're going to do is we're going to go through the earnings. I'm going to quickly go through their financials. And then I'm going to give you some insight that came from the conference call. So, revenue for this quarter, man, I feel like I'm saying this every time with Apple. This was a blowout quarter. $81.4 billion in this quarter. And that's versus estimates of $73.82 billion. That's a huge beat. And this was up 36% year over year. Some caveats with that, but we'll get into that. EPS was $1.30 versus $1.01. Again, a huge beat. Gross margin surprisingly stayed very strong as well. They're saying next quarter these might come under a little bit of pressure, but 43.3% gross margin. iPhone revenue was a huge beat, 39.57, and this is when all the concern is always with the iPhone. Expectations were about 34.5 billion. And this is up 50% year over year. That's huge. iPad revenue was 7.37 billion versus 7.13 billion. As you can see, we beat on everything. Mac revenue, 8.24 billion versus 7.99 billion. I believe that this is something, I've mentioned this before, that's going to continue to do extremely well. With the new M1 Max, I feel like this is something that is very undervalued. A lot of people don't know about this yet and how big this is going to be for Apple. Probably the first biggest thing, though, of course, is going to be services revenue. I've talked about in my other videos before about how huge this is going to be, how much this is growing. And again, we hit an all-time service revenue record, almost $17.5 billion in a quarter. Expectations were 16.32. So over $1 billion beat there. That's crazy. And they talked a little bit about that on the conference call, so we're going to get into that. I'll give you a little bit more insight onto that after. Wearables, home, and accessory was $8.78 billion in revenue versus 7.62. Again, a huge beat there, and this is up 30% year over year. Let's take a quick look at their financials right now. So as you can see, these are on a year over year basis. Both products and services just blew it out of the water, and that gave us the total net sales of $81.4 billion. Look a year ago, it's just under $60 billion. That amount of growth is crazy. Gross margin also increased significantly. I always look at research and development and like to see that going up because we have things like Apple Car and that I'm sure that are coming. That are going to be drivers in the future, so I like to kind of watch that, make sure that's always going up. So that's something great to watch as well. Net income, $21.7 billion versus $11.2 billion a year ago. That just shows you the amount of growth here. EPS, we'll look at diluted, was $1.30 versus 65 cents last year. Huge EPS growth. And it's interesting to look at the net sales by the reportable segment. Every single reportable segment grew significantly. Americas, 35 versus 27. Europe, 18.9 versus 14.1. Greater China, that's the one that, remember when we were all concerned about that, how that's rebounding there, 14.7 billion versus 9.3 billion. Japan, 6.4 billion versus 4.9 billion. And the rest of Asia Pacific was a huge beat as well. So that gives us our total net sales of 81.4 billion. By the reportable category, we can see the growth in the iPhone there. That's that 50% year over year growth. $39.5 billion they made in the last 3 months. That's versus 26.4 billion. A Mac, I mean, you can see the growth even in the Mac, and like I said, I think that's going to get even bigger. iPad, again, even though arguably there hasn't been a huge amount that's happened with the iPad in the last little bit here, other than the M1 chip going to it, still significant growth. And then the wearables, of course, 8.7 billion versus 6.4. And my favorite, services. Actually, I'll go back to the wearables there just for 1 second. I think that one of the reasons that we're seeing the growth on that is because of healthcare, and that's something that hasn't been talked about a lot. Apple Watch and things like that, even though there hasn't been huge increases in the say the technology with the Apple Watch, I think that's going to be a segment that's kind of going to come out of nowhere and surprise a lot of people with the growth, and that's a huge amount of growth. Back to services here, again, services just unbelievable, 17.4 billion versus 13.1 billion dollars. In terms of their cash position, when you add up all the different components, we're about 194 billion dollars cash. I believe that's slightly down from last quarter, but of course, cash is never an issue with Apple. Looking at the statement of cash flows here, cash generated by operating activities was $83.8 billion versus $60 billion. Just cash creating the machine. Nothing too interesting here other than under financing activities here. I always like to look at the amount of repurchases of common stock, which is over $66 billion in the quarter. Look at the growth versus $55 billion a year ago. So they're accelerating that, and that's obviously bolstering the EPS. And also above it here, the payments for dividends and dividend equivalents, $10.8 billion. Yeah, roughly the same. They haven't increased their dividend too much, but just something that I like to look at for sure. So then you go down to the bottom line here, or almost the bottom line, and that's where we get the cash, cash equivalents and restricted cash at the end of this period, and that was about $35.2 billion. So now to get into why the stock is responding the way the stock is responding. Now going into this quarter, I wasn't really excited. I didn't think there would be anything too big in this quarter. Not a heck of a lot that's new. Of course, every time I feel like I say this, I was like, what? Like, huge beat. But the reasons that I think the stock is going down is a lot of the comments that were made on the conference call. Again, one of the hugest things that investors hate with what's going on right now, they gave no guidance for next quarter. Although they didn't give any guidance, they still gave a lot of hints. And I personally think they were being a little bit too conservative, as they always are. But that might be something that's hampering the stock. They're still saying next quarter we're going to have strong double-digit growth, which is unbelievable to see this kind of growth for the company that's this big. And the narrative with Apple, why it's as cheap as it is, even though the multiple's higher than it's been relative to the past, is, oh, they can't get much bigger. How can they get much bigger? But we've been saying this for how long? How many years? I mean, people were saying this in the 90s, right? So they're saying it's going to be strong double-digit growth, but no 36%, right? We saw 36% year-over-year growth in revenue this quarter versus last quarter. So that was kind of a negative thing, like, well, it's going to be double-digit, but it's not going to be this big. But again, this was huge. One of the reasons that they mentioned in the conference call that this was so huge is because of a favorable comparison. Last quarter, due to lockdowns, they weren't seeing this kind of growth. But at the same time, I would argue that maybe not a lot has changed. Maybe people weren't going out to the stores as much and stuff like that. But they were still using their services. They were still using, all their products are geared towards lockdown, really, right? So I think that maybe that's a little bit overblown as well. Also, they said services are going to be more normal. And again, like I said, these services growth was insane. It's going to grow to a more normal level. So that was something that was negative as well. But a more normal level is still exceptional. When you see services, asked me 5 years ago if they would have close to, pretty soon here, $18 billion in 1 quarter of services revenue, I would have probably told you you're crazy. Also, like a lot of other companies, and this is something that's brought down a lot of other stocks, chip shortage. They warned of a potential chip shortage. And this isn't something that Apple has hinted at too much yet. So it was kind of interesting to hear them say this right now. I know that other companies like Ford and stuff like that have warned of this, and it's hampered the stock. So this might be a reason as well, although Apple's not down too much. I think going into this, of course, last quarter was unbelievable too, and the exact same thing happened with the stock. When there's good earnings with Apple, I almost expect the stock to go down. So, because it seems to, right? Maybe if they have bad earnings one time, the stock will go up. I don't know. But a lot of this is like buy the rumor, sell the news kind of thing, right? And then coupled with these reasons that I've given you here is the reason that the stock is responding the way it has. Going forward, I obviously think that this is a no-brainer, in my personal opinion, guys, and this is my personal opinion. Next 5 years, this should be a $200 stock. They mentioned a lot about 5G in the conference call. Still, such low saturation. The infrastructure really isn't there. So that's going to be a huge driver in the future. And we're seeing with their install base, as their install base grows, like this, like their master plan, all their services revenue, even maybe their wearables, home and accessories are growing with this. Plus, people are forgetting about all the big things that are going to be happening in the future, whether it's Apple Car, healthcare, augmented reality. There's all these other things that Apple's so secretive with that they're not even mentioning right now. So obviously, as always, guys, I'm super bullish on the company. I was not expecting much this quarter, and it was an unbelievable quarter. But I would love to know what you guys think, where you think the stock price is going from here. Don't forget to leave a comment down below, like the video, guys, and subscribe. It really helps the channel. Thanks so much for watching, and I'll see you in the next one.